Hey, Bigger Pockets. Welcome to Ask Me Anything Real Estate with Paul Moore. I'm so excited that you're here. And it is Friday at 4 o'clock Eastern Time. And I am going to be talking about commercial real estate today. We're going to talk about why some people want to move up to commercial, why some people find that commercial is more wealth building than residential real estate. I just need to know that you can hear me. And so do me a favor, if you're on Facebook Live or if you're on YouTube Live, please just give me a quick thumbs up and let me know that you can hear me and that you can see me and all that stuff. Tell me where you're from. Hey, Dude Real Estate. Nate Shields from Madison, Wisconsin is joining us today. Nate is one of the most formidable, amazing real estate gurus that I know, and I'm really grateful to him that he has actually taken time out of his busy schedule to join us today. So if you can hear me, Anthony Sharp says, yes, I can hear you. All right. Ben Keffer says, St. Paul, thanks. Okay. So, hey, really glad you're all here. And before we get going, hey, Dave Weinstock in Boston, tell me where you're from. Tell me what you do. Would love to hear a little more about you. And then we will get rolling here. Hey, home investor, thanks so much for your help. Is any downside to a cost seg on residential real estate if holding long term? Nope. Any bad 1031 exchange implications? Nope, not that I know of. I don't know of any, home investor. Hey, Preston Geely. Hey, Danny Ramos. Welcome back. Goldilocks from Florida. Hey, David Carroll. Hey, William Pennington. How are you? Dave Weinstock from Boston. Ben Keffer. Joshua Duhan. Hey, we got a lot of people over here on Facebook and on YouTube. Now, I want to put a little caveat in here. If you're coming in on BiggerPockets live today, I don't know if I can see your questions. Zach, it looks like I might be having a little problem finding the Q&A here on the BiggerPockets site. So anyway, if you're on BiggerPockets and you want to ask a question, I think you're going to want to jump into YouTube Live or Facebook Live. Okay, so I'm going to go in. First of all, I'm going to tell you 10 Auckland, New Zealand. I've been there. Hey, Anthony. Welcome. Hey, Keith Hill, AIA from UK. Brandon, Michael Jones, Brandon Alsor. Sorry, I pronounced it wrong. Jerome Perry. We got a huge group here today. This is amazing. Hey, Joshua, thank you for serving the people of your community. Okay, so we are going to jump in here, and I'm going to tell you 10 reasons not to invest in real estate. Yes, I said not to invest. Second, we're going to go over 7 ways to get involved in commercial real estate. And then third, we're going to spend about 40 minutes answering questions. So if you have a question, it's probably best if you save it because I probably won't see it if you ask it now. I'm going to be going off the questions panels and on to start our little fun thing here with 10 reasons not to invest in real estate. So if you are a real estate investor and you want to be talked out of it, this is the place. That doesn't sound right, does it? Nate, what am I doing? Am I crazy? So let's get into it. So 10 reasons not to invest in real estate. Number 1, all the richest and most successful people are investing in real estate, and you certainly don't want to be associated with them. Huh? Number 2 reason not to invest in real estate, trading stocks reminds you of trading Beanie Babies, which you were definitely not crazy about, nor did you have a closet full of them. Number 3 reason not to invest in real estate, you would hate it if you got a deposit of cash in your account for doing nothing this month. Number 4 reason, you like the control of investing in stocks and being able to personally and directly influence the price of Google or Apple. Oh, wait a minute. Number 5 reason not to invest in real estate, you like being able to call up CEOs directly to ask about your stock values. Number 6 reason, you like knowing that the moment you stop working, you'll stop making money. Number 7 reason not to invest in real estate, wait a minute, what if a tenant's toilet breaks? you'd have to fix it yourself because you're the only person in the world who knows how to fix toilets. What? Number 8 reason not to invest in real estate. Everyone else seems to be investing in stocks and you like to follow the crowd. Number 9, the government seems full of nice, hardworking people who are doing a stellar job, and you want to be sure to pay them as much taxes as you can. And number 10 reason not to invest in real estate. You want all your money in one account because you can only remember a single username and password. Hey, who wants a bonus? 11th reason not to invest in real estate, Nate Shields. What do you think? People may suddenly decide they don't need roofs over their heads or indoor plumbing or modern appliances. Hey, I want to thank my friends at Good Egg Investments for providing this list, today's top 10 list. Now, like I said, we're going to go over 7 ways to get involved in real estate. Why would you want to be involved in commercial real estate rather than residential? Well, you know, if you are Chip and Joanna Gaines Jr., and Chip and Joanna, you're probably listening. If you are, please give me a call. Here's my phone. Would love to hear from you. I've got some great investment opportunities for you. But if you are Chip and Joanna Gaines Jr. and you buy a $300,000 house and you upgrade it to an $800,000 house, let's say you put in gold plumbing and finish the attic, finish the basement, put a massive sunroom on it, you know, all that stuff. If that neighborhood only has $300,000 homes, chances are you're not going to get your $800,000 back out of it. You're probably going to lose money. That's no fun because residential real estate is based on comps. And that means if the neighborhood is full of $300,000 homes, it's going to be really hard for you to get $800,000, right, Nate? But if you are in commercial real estate, it's entirely different. It's based on math, not comps, but math. And here is the most important thing I'll probably say today. So if you're going to write anything down, this should be it. In commercial real estate, the value is based on a formula, and it's called the value formula. And that value formula is value, the value of the property, is the net operating income divided by the cap rate. In other words, it's the income divided by the projected rate of return. And that's true for other asset classes in some ways as well, like stocks have a similar, like a price to earnings ratio. But it's similar to that. And the cool thing is if you can increase the revenue on your commercial real estate property, like a mobile home park, a self-storage facility, multifamily, senior living, if you can increase it by $1, check out what it will do for you. So you increase the revenue by $1. Let's say you raise rent on one unit $1 a month. Okay, that's $12 a year. My mama always told me I was good in math, and that's $12 a year, and that's $12 in additional income in your pocket. But it's better than that because the value formula says that the income divided by the rate of return is the increase in value. You take $12 and divide it by a 6% cap rate, that's 0.06. $12 divided by 0.06 is an increase in value of $200. $200, but it's better than that even, Nate. It's better because we've got something called leverage. Now, leverage means the impact on the asset is leveraged or multiplied to get the impact on your cash. So if you've got 60% loan to value ratio, that means you divide that $200 increase in the asset value by 1 minus 0.6, which is, again, the leverage, the loan to value ratio. So you divide it by 0.4, which means you're multiplying the impact 2.5 times on your cash. And so here's a simple example. I've used it before. But if you have a mobile home park, we invest in mobile home parks and self-storage. By the way, I'm Paul Moore, if I didn't tell you, with Wellings Capital and BiggerPockets. And Wellings Capital invests in self-storage and mobile home parks. Now, we invested in a mobile home park recently, and I'm going to round these numbers massively just to give you an idea how this can work. Now, the mobile home park operator that went in after we invested said, there's a lot of extra cars in front of these mobile homes. There's work trailers and there's RVs and there's even a boat or two. Let's do something here. So they paved an acre. This operator spent $100,000 paving an acre of land, and he put a beautiful fence and a gate around it. And he started saying, okay, if you've got an extra car, boat, RV, work trailer, or whatever, you've got to put it in here. And then he opened it up on Craigslist to the community and as boat and RV storage. Now, as a $100,000 expense, he's going to generate up to $10,000 a month. If he generates $10,000 a month, again, math, that's $120,000 a year. 12 times 100,000. 120,000 in increased income. Remember our value formula. Value is income divided by cap rate. So if that's true, then the income divided by the cap rate in this situation is 120,000 divided by 0.06. And what is that? That is $2 million increased value. What? $2 million increased value just by spending $100,000 on this gated area. Now, if that's the case, what does that mean to the investor? Well, I think I mentioned he paid $5 million for the mobile home part. That's $3 million in debt, right? 60% in this case. $2 million in equity. That means $2 million in cash in it. Well, guess what? He just increased the cash value by double, like $2 million, and he added $2 million more because of the value formula. And the bankers didn't get to share this. Sorry, bankers. Only the equity holders did, the investors. And so the investors' $2 million value just went up by another $2 million to $4 million. Pretty awesome. And so that's the value formula at work. So that's why people love commercial real estate. Now, a lot of you probably wonder, hey, I love the idea of commercial real estate. I've heard about the tax benefits that were provided by the investor in chief in the Oval Office and his friends in the Beltway. I want to get in commercial real estate. I like this, but where do I start? Who do I trust? How do I get in? Where's the on-ramp? Odell, the 0.06 is a 6% cap rate. That's the rate of return. I just happened to see your question right in front of me. I couldn't avoid it. So here's a quick 7. This is maybe the second most important thing I'll say today. So here are 7 paths, 7 independent paths to get involved in commercial real estate investing. And we can dive in deeper on any of these 7 paths if you want, but you're going to have to ask. So ask and you will receive, seek and you will find. Here we go. All right, 7 paths. Path number 1, Brandon Turner calls it stacking. Stacking means you start small and work your way up. You buy a duplex, for example, if you're in multifamily, you paint it, fix it, rent it, sell it. Take the profit, you buy a 4-plex. Take the profit, buy an 8-plex. Take the profit, buy a 100-plex eventually. So I met a guy in Dallas, Texas, Arlington actually, a couple of years ago. He'd been doing the stacking method since 1992, so for 23 years. He had started with $1,000 out of his pocket, and eventually he added $130,000 from a wife, a woman he married, who obviously is his wife. And so he had $131,000 total invested, I think, and he was selling an $11.8 million apartment complex. So stacking works. Was it hard? Did it take a long time? Oh yeah, absolutely. If you want to use stacking, there's a certain book on multifamily I'd recommend. Steve Burgess, Berges. It's the complete guide to buying and selling apartment buildings. And of course, Brandon Turner's got some great stuff about this as well. So first, stacking. Second path, be a deal finder. In other words, basically be a non-licensed commercial broker. Now, I'm not recommending you be a broker, but you go out and find deals. You provide those deals to a syndicator, and you say, look, I want to stay in. I don't want a commission. It's illegal anyway if you're not licensed. I want to stay in the deal. Give me a small percentage of the deal and teach me the business. So that's like a bird dog. That's right, Butte. It's hard to do that right now. Really hard. But it is possible, especially if you have an inside track on some deals. Third would be a capital raiser. Now, to do this legally, you probably should get licensed as under a broker dealer like Wealth Forge in Richmond, Virginia. A lot of people are licensed under them these days because they're pretty flexible and they allow you to raise money for deals. You can raise money for deals and you can just ask if you can stay in the deal and get a piece of the ongoing profits and ownership. So that's 3 ways. The fourth path to get in is hit the lottery, sell your Bitcoin, make a lot of money in tech. I just talked to a guy today who just sold his company. He's in Sarasota, Florida. He's got an incredible real estate company and he is selling. He just sold his company to a publicly traded firm and he's getting ready to go out and invest that money. Well, if you have a lot of money to invest, just get a really good team around you and invest wisely. You can basically buy your own assets, get a property manager, get an asset manager, get a really good team around you, and go to town. It's dangerous, it's risky. You need to have some really good people on your team. A fifth strategy is get a job. Get a job. You guys are here on BiggerPockets because you don't want a job, right? Am I right? Give me a thumbs up, a like, or a share if you don't want to work for the man. If you don't want to just get a job, just give me some kind of a like here because I want to make sure that Zach, Gwynn, and my friends at BiggerPockets know that you like this show and that this is valuable content. So please, seriously, would love to get a smiley face or a like or something. That also tells Facebook and BiggerPockets. Thank you, Anthony Sharp and Stephen Lewis and Mr. Rodriguez, Chad, Carlos. Thank you. So that tells Facebook and BiggerPockets that we're doing something decent here. Thanks, David Carroll, SB, Caliology. Sorry, I pronounced it wrong. Hey, Mark, Julian. Man, there's a lot of people on here today. It's a fun day. So anyway, wow, thank you. But seriously, you can get a job. And the way to get a job, I would say, would be number 1, you could go to college if you're young, or even if you're not young, and get a degree. Gary Keller, Keller Williams Realty, got a degree in real estate. And there's other people who've gotten degrees in real estate. And I totally think that that is a decent path to getting started. I spoke in Liberty University this week in Lynchburg, Virginia, in their real estate class. And there's a lot of people in there hungry to learn real estate. And it makes me so happy to see that a college is doing that. Okay, a second path within the get a job path, that's not really one, is to get a job as a commercial real estate broker. I talked to somebody this week who got a real estate license in Atlanta, and they're going to be going after that. That's a great way to meet people, get to know the numbers, get to know the assets, getting to know property managers, getting to know buyers and sellers. Another path is to be a commercial lender. Again, you get to know the numbers and the players and the investors. It's a great path. Another path would be to be an asset manager. It's a little harder to put your hands around this. Becoming an asset manager means you are working for a company that manages, usually typically owns and operates these assets. And then the last path in this get a job track would be to become a property manager or get a job for a property manager. Okay? So if that makes sense, let me know. Would love to hear back from you on that. Now, Rick Graff, Graf, I think. No, one F, is one of the top people in multifamily real estate. He started out in college as a porter at a multifamily property. Okay? And so he's a porter, like a janitor, and he worked his way up to the CEO of Pinnacle, the second or third largest property management firm in America, and he owns his own properties as well, from what I understand. The sixth path to getting involved in real estate, commercial real estate, is to be a passive investor. Now, somebody at the very beginning of the show, before we even started here at 4 Eastern, I think it was Alex, said, how can I invest passively? Who can help me do it? Alex, reach out to me. Our company, that's what we do. We specialize in helping people invest passively in commercial real estate, but I'm not here to advertise. myself. There's a lot of great people on BiggerPockets that can help you invest passively. Now, one place to invest passively is with a crowdfunding company, like Fundrise, CrowdStreet, Realty Mogul, I think Realty Shares. I can't remember if they're still in business, but they probably are. I don't want to say anything bad about anybody. But these are great aspects. And if you don't know where to start in crowdfunding, if you're a non-accredited or an accredited investor, you can go to the Real Estate Crowdfunding Review. My friend Ian Ippolito put that together, and he rates different companies in there. And by the way, I don't even have access to this. I can't even look at it because I'm a sponsor. I help, since I'm on the investor operator side, I can't even look at these private forums they have. They're just for investors, and you've got to prove that you're an investor to even get involved in this and look at these forums. So, all right, so passive investing is, to me, I've written several times on this on BiggerPockets. If you've got a job as an orthodontist, a dentist, an oral surgeon, a highly paid attorney, a doctor, you would probably be best to focus on what you're making your money at. Or a high-tech person, if you're out of the Bay Area, or if you're working in tech, like a guy I just talked to in Fort Collins, Colorado earlier today. He's at a tech company making a lot of money. Well, he'd be better off, I think, focusing on where he's making his money and then investing passively. And it is shocking how much you can make passively if you invest right, and how much you can save on taxes. All the tax savings flow through to a typical passive investor. I'll just leave it at that. If you want to talk more about that, let me know. The seventh way to invest to get involved in commercial real estate, then I'm going to do Q&A here, is to get a mentor or a coach. Now, there's two types. So a paid coach would be where you pay someone like $20,000, $30,000. I've paid $25,000 twice in my career, in two different aspects of my career, to learn under a paid coach. Okay, so that's what I recommend. A second path in that under that is getting a mentor. Now, this is where you would go to a company, maybe a syndicator in your town or a sponsor or somebody who's already doing deals, and you say, hey, I'm really great at SEO. I'm really great at Google AdWords. I'm really great at raising money. I'm really great at deal finding. I can do administration. And you can basically just ask them if you can work for them, if you can go to work at their company, and you say, hey, I'll work for free. I'll do Excel spreadsheets for you. I'll work for free or for really cheap if you will let me learn the business from you. And so it is an awesome way to get involved. The top commercial real estate broker that does rentals in San Francisco got started this way. She's a powerful woman, and she started 11 years ago. She offered her services for free to a commercial broker if they would let her learn the business. So like I said, if you're watching on BiggerPockets, I cannot see your questions. You'll have to come over to YouTube or Facebook. Hey, YouTube and Facebook folks. So I am going to try to answer some questions over on Facebook first. If you've been saving a question, or if you asked one that didn't get answered earlier, it would be a great time, especially on the Facebook side, if you want to copy and paste your question in again. I will do my best. Hey, Joshua, firefighter, again, thanks. Hey, Fabian from Connecticut. Okay, Dave Weinstock says, looking into larger multifamily, 60 to 200 units, past townhouse development, financing, rehabs, etc. Okay, great. Thanks for joining us. Hey, Dan from South Jersey. Joshua, another fire medic. Thank you. Verda from New Jersey. Hey, Verda. Fabian says, you're not convincing me. Ka Kwang Tran says, what type of net cash flow would you target per door for 10 to 20 units? That's a great question. I think if you get Brandon Turner's book or read some of his articles, he could answer that better. I think more in terms of cap rate. I like to see you get like a 6% cap rate or better. So if you don't know about cap rate, I'm going to be writing about that in BiggerPockets soon. And if somebody here wants to hear about cap rate, one or two people ask, I'll answer. Sean Irwin says, what percent? I guess what I would say, I'd like to hear from Nate over on Dude Real Estate, but I would guess $100 to $200 free cash flow per door per month would be what a lot of people say. Sean says, what percent do you normally raise? Not including rehab. I'm not totally sure I understand your question, Sean, but thank you for asking. We typically raise so on the last large multifamily I raised 73, we did 72% loan. And so we raised 28% in equity. And then we raised another $1 million or so for improvements, rehab, capital improvements. Can you name those books again? Hey, Zach Clark. Hey, Jennifer Kenworthy. Steve Burgess, The Complete Guide to Buying and Selling Apartment Buildings is one I recommend. There's another book on apartment building investing written by some crazy guy in a blue shirt as well. But anyway, that's funny. Fabian says, get a job, start small business on the side, then grow it and leave your job. Thumbs up, man. That's what I would do. I've done that before, twice. Ricky Tiki Ali, hello. So I think I've recently learned that when you do a cash out refi on a property, the IRS doesn't let you deduct the mortgage interest as you otherwise could with the mortgage interest on a typical mortgage. Is that correct? It seems like a crappy truth if I learn correctly. Any insight on this, please? Ricky Tiki Ali, nobody has ever asked me that in a year of doing this, or a year and a half. And I think technically you're right. I have heard that. If we have a CPA on here who would know this, if my friend Brandon's on here, any CPAs, I'd like to hear from them. I'm not a CPA or a tax attorney. I don't play one on TV. And I have heard that before. I don't know that everybody abides by that. I'm not saying we do or don't. We don't have any debt on the stuff we're doing these days anyway. But Jamie Costain says, assuming I want to do the BRRR method, what are some ways you can fund your renos aside from doing a joint venture? So Jamie, you can do it with hard money. You can do, I don't know if you consider it a joint venture, but a hard money lender. Private loan, private note. People with IRAs have money they want to invest. You can often get that money for like 1% and 12% interest. That's what I would do. Of course, you can also go get a credit card that doesn't charge interest for 18 months. And there are whole places you can do that. There are places you can learn to get those kind of credit cards. Ben Kiefer says, what's your recommendation for property management software? Depends what size you're at, Ben, but I would like to hear from some other people on that. I don't necessarily have a property management software for most size apartments. So I'm not sure I have an answer. I would recommend that you really make sure you do that right, though. Spend the money to get a nationally renowned software. How about that for a terrible answer? Noah Hollister says, next year I'm going to start saving for my first rental. If you were starting over again, how and what would you do? I live in the Midwest, no debt, paid for personal residence. No debt. Nice. Okay. What I would do is, no, it sounds like you don't like debt. So you probably won't like it when I say go out and get a private equity line, like a home equity line, a HELOC, and use that to buy your first rental. But honestly, the math really, really works. No matter what Dave Ramsey says, the math works incredibly well, especially with interest rates low and predicted to be low for a long time. That's just what I would do. You can also get a partner. You're welcome, Zach. Ray Wallace says, what's the lowest cash-on-cash return you would accept as a good investment? I would say something on the order of 6% cash on cash, depending on the risk. Now, if you're in a really high risk type thing or a mobile home park, you might want to get 8 as a minimum, maybe even higher. Ben Kiefer says, I currently own 4 residential rental units held in an LLC. I'm about to invest in 8 maxi storage units, which will be bought with a commercial loan. Any drawbacks in using the same LLC to hold them all, or should the storage units have their own LLC? Ben, there's a very small drawback. If you get a lawsuit in one asset, it can go against all of them, and that would be the downside. I have a lot of people, though, say that you can hold multiple assets in an LLC. So I'd love to hear somebody else on that. I mean, if you really want to be safe, put them in separate LLCs so you're containing the risk. How much does your due diligence usually cost? Sean, it can cost like on a 125 unit apartment building. I think it was like 20,000 total. It was quite a bit. I think a lot of the physical due diligence, I have a vague memory, was like $50 per unit. So that was, if that helps, for physical. That's going in and doing inspections. Ray Wallace says LLC versus insurance for asset protection from lawsuits. Excuse me. I'd say both. I would get a blanket or like an umbrella policy on top of doing an LLC. Okay, I'm going to try to answer some questions over here in YouTube. So I've been neglecting you guys. Hopefully Dude Real Estate has been helpful. I am going to try to answer the newest questions first in YouTube. So if you've got a question in YouTube that hasn't been answered, and I know there's like way over 100 here, please copy and paste it right now. Okay, here we go. Preston Geely says, how hard is it to refinance a mobile home park? The cool thing, Preston, is a lot of owners of mobile home parks think it's impossible because it was really hard to finance those in the 80s and 70s and 60s. And so sometimes when you go to buy one, you can get owner financing. As far as refinancing, it's getting easier all the time. Check with Live Oak Bank. I know they do a lot of self-storage. They may do mobile home parks as well. Also check with 21st Mortgage, which is a Berkshire Hathaway, Warren Buffett company. But you should be able to check with credit unions, local banks, regional banks. Michael Jones says, teach on stacking. Michael, basically what I'm saying is you keep buying, fixing up, increasing the value, selling, and then going up to a larger asset. And you just keep stacking. It's like really, it can also be called a stair-step method, okay, of going to larger assets. Racer 30 Z400 Racer says, how would you go about GP finding inside track deals in commercial real estate? The best way is to have a bank of people working the phones constantly. You can also check with offer.com. I think it's OFFR.com. They might have some help on finding. I think they sell lists of commercial real estate. You can also do letters, postcards, things like that. Ben Elliott, okay. Ian Jones says, recently quit job, moved in to care for elderly parents, have a condo paid off worth $150. Where would you start? I would start with maybe getting a HELOC, a home equity line of credit on that condo, and then being ready for deals that you could find. Ian, maybe you want to tell me more what you're interested in, what you're passionate about, what opportunities are in front of you. David Carroll says, I'm investing with a solo 401k, about $100,000. Where would I start? If you're not accredited, David, I would go on some of the crowdfunding sites or that Ian Ippolito site, which is the Real Estate Crowdfunding Review, and try to find some non-accredited opportunities. If you're accredited, and you probably know if you are, or you can look it up, there's so many good investment opportunities these days. David, you can reach out to me and I can tell you about, sometimes I give lists of maybe half a dozen great opportunities in self-storage, mobile home parks, and multifamily. Mark says, what's your best advice for an absolute beginner with minimal financing? Okay, so Mark has asked the question that somebody asks every single day, and I really do appreciate it. Mark, I would do either a corporate landlord arbitrage, which I've talked about in an article that says How to make $10,000 a month without quitting your day job. It's on BiggerPockets, and I explain in detail how to do a corporate landlord arbitrage. My friend Al trains people on this. I know I said on there how to make $10,000 a month. I felt a little bad for saying that, but 18 months later, I've had a pair of guys come to me. These guys work together. They didn't quit their day job. They're now making $70,000 a month. That's 70 gross, and they're netting about 50% of that in profit, about $30,000 to $40,000 a month in profit, doing corporate landlord and Airbnb arbitrage. So Mark, that's what I'd recommend. My second strategy would be to do a rent to own or lease option sandwich. Rent to own sandwich or lease option sandwich. If anybody wants to know about that, just ask. It's quite a lengthy explanation though, so I don't want to go into it unless anyone's interested. Somebody says, what's the lowest amount you need to start an investment in real estate? I mean, if you do a rent-to-own sandwich, you can start with $5,000. If you want to do this corporate Airbnb or corporate landlord arbitrage, $5,000 or $10,000 for sure. Jay Romano says, can you tell us again the resource for looking up if there's storage units in your area? Yeah, check Radius Plus. It's RADIUS, Radius Plus. And you can see how many self-storage facilities are in a given 2, 3, 4, 5 mile radius or whatever. Okay, Alice says, is it tough in places like Seattle for rentals with the first come, first served law where you can't choose your tenants? Alice, I've heard that Seattle's a pretty tough place to rent these days, so I'm kind of guessing that's the case. Set high standards, and then I think you can still screen by those high standards. Crack Statue says, I pay rent, no debt. How would you begin your real estate endeavors with a goal to have enough passive income from rentals? I would start with the corporate and Airbnb arbitrage. Again, same idea. Andrew Reyes says, hi, Paul from Southern California. There's a property for sale with a single family rental and a small office next door. Zoning is community commercial. Could I build a storage or laundry? There's only one laundromat in a town of 9,000. Wow. Well, Andrew, if you're in Southern California, you're going to have a hard time building anything. I'm being super honest here. I would check with your local planning and zoning board and check with some local developers. Go to your local RIA or a neighboring town, Real Estate Investor Association, to see what they have to say. That's really interesting, though. I mean, that would be, I'd like to hear more about that. Matthew Koch says, how do you get Section 8 to qualify for an apartment complex? Nate Shields, do you know? I'm not totally sure. I think you have to go down and apply at your local low-income community development authority, whatever they're called in your area. Jay Romano says, yeah, assessment for need of laundry in your area. How do you do it? I don't know how to do that, but I think there'll probably be some training out there on how to do that. I would look into that. Joseph Ramirez says, what's the conversation like in acquiring a pre-foreclosure? How do you structure the contract? Yeah, what I do sometimes, I used to go to the door of somebody whose name and their property was in the courthouse, in the newspaper on the courthouse steps. And I would just go to the door and say, hey, look, I want to help you try to save your credit. If you want to move out and let me take over your mortgage, we can do something called a rent to own or lease option sandwich. I'll take it over. I can't promise I can fix it and save it, but I'll do my best. And then you turn around and rent it to somebody else. You pay their back payments. That's why I say you need a few thousand to do this. You get a deposit of several thousand from the person renting to own from you, and then you charge them more every month than you're paying in mortgage, and you pocket the difference as your profit. It's totally legit, totally awesome, and it will not set off the due on sale clause on the mortgage if you do it right through a land trust. I know I'm throwing a ton at you. You guys are probably, heads are spinning. Look into that. Read up more on land trusts, rent to own, and lease option sandwiches. The conversation in a pre-foreclosure, yeah, I just basically tell them, look, it looks like you want to move out. You're going to lose this house anyway, and do not let them rent it back from you. If they can't pay their mortgage, they're not going to be able to pay you even more for rent. Terrence Cheatham, hello, Terrence. If you could build new for the price of what's available on the market, why are people buying existing homes for rentals? Just convenience, Terrence. There's a risk factor in building new. You can have 20, 30, 40% cost overruns. Or by the time you get it built, the market might have shifted. That's why people would buy existing. Megan Oliveira says, when do you do LTV at 70% plus? Doesn't your mortgage go up, affecting your cash flow? Yes. How does this fit into the BRRR equation? Nobody talks about this. Yeah, I mean, with mortgage interest rates so low right now, but rent's stable, Megan, you can sometimes afford a 70% plus mortgage and still make a good profit. So, I mean, that's just kind of what I would say on that. I'm not sure what else to say, but if you want to clarify or ask more, you can. Mr. Malcolm Stokes says, what's better, flipping houses or buying and holding? I would do some of each. I'd highly recommend that you consider doing some of each. I wouldn't do just one. I would actually do some of both. I don't think there's a definite answer on which one's better. Sorry. Butte Win says crowdfunding real estate as low as 500. Yeah, you can possibly do that. Did I miss somebody? How would you buy a commercial strip mall, says Michael Jones. I probably wouldn't. I think it's pretty risky right now. I don't know that I would do that. Jean Lelor says, sorry, that was bad attempt at French accent. Do you mentor folks, Mr. Moore? I'd like to learn from you. Yeah, I do occasional mentoring. You can reach out to me again, Paul Moore at BiggerPockets. You can reach out to me there, or at Wellings Capital. Sulaiman Shah says, can I use a business line of credit cards for down payment? Yeah, I think you could. I would think so. Yes. Nate Shields, Dude Real Estate, says, yes, I've done this. Michael Jones says, there are abandoned houses around the Queens area from the storm Sandy. Where would I start to obtain them? Properties are 2 blocks from the beach. Wow, Michael. I would go down to the local county planning and zoning and tax office and see who owns them, or check online and start there. Just whoever owns them, follow up. Mr. Rodriguez says, where should I start in Southern Cal to become financially free in real estate for a beginner like me? Thanks for the knowledge. Okay, Mr. Rodriguez, I would probably invest out of state, and I think Nate would tell you the same thing. Southern California is really hard right now. I'll just say that. It's really, really hard. Dude Real Estate says, are you open to house hacking? That's a good point. Nate Shields, by the way, Dude Real Estate, if you need some training or mentoring, he can really help you. He's been coming on here, joining me on here for months and months and months on his own time, just for free, just to help me answer questions. So thumbs up to Dude Real Estate. He also does some mentoring and training. I think he's got some course he does online. It's way, way less expensive than most people in most situations that charge a lot more out there. Brandon Rood says, I noticed that a few notable firms such as my company, Wellings Capital, and others like 37th Parallel are moving toward fund managed based investing as opposed to traditional syndication. That's true. Do you think this is the future of real estate investment firms, or a logical step for firms once they become well established? I'd say more the latter, Brandon. I don't think it's the future, but I think once you realize the power of diversification and the benefits of it, like we have, and like my friends at 37th Parallel have, they're very good friends of mine. Talked to them last night. We both feel that the diversification that is allowed by a fund, and there's another huge advantage we get as a fund investing in portfolios of real estate that I could go over if anybody wants to talk about passive investing for accredited investors. I don't want to bore you with it unless it's something you're all interested in. So if somebody's got 50 or 100,000 they want to invest and you want to hear another advantage of funds, we can talk about that. Rathead says almost all mortgages won't allow you to put property under an LLC. Yeah, right? Yet all investors do it. I carry an umbrella policy because I don't want to void the mortgage agreement. Yeah, my son did that. He actually took some properties he was investing in and he got it switched into an LLC, and his bank, because it was a local bank, they were really flexible and they let him do that. They're a lot bigger. There's a lot more flexible than huge banks. I don't know how to answer that though. Raed Umar says, if you have rental properties before a market crash, then if the market crashes, is it better to be house hacking 30-year fixed rate loans for multifamily 2 to 4 units or commercially amortized 30-year? You know, honestly, Raed, I think in a downturn like that, you'd be better to have a fixed product you can hold on to for a long time, because honestly, those commercially amortized 30-year, that might be a 2-year loan. If you hit a downturn and you're in 2 years, you could be in big trouble. I could spend a lot of time explaining why it's better to have a long-term fixed rate, even if you pay a little more for the interest. Ian Jones says, using the line of credit on my $150,000 condo, could I purchase 2 other rental properties around the same price point? Yes, absolutely. Would you be able to get a bank loan without a source of income? That'd be tough. That'd be tougher. You really should have income. Do you expect interest rates to go up after the election? No, not necessarily. Christina Bruce says, do you have any insight into the Northeast, Jacksonville, I guess, Florida, St. Augustine market? No, I don't. I've heard it's pretty strong, but Florida is a sand state, so just like Nevada, Arizona, and California, they go up high and they crash down low. One of my investors told me last night they paid $60,000 each for 2 duplexes that are worth $215,000 each. Not that long later. So they go way up, they go way down. Be careful. WCA Nation says, I'm living in Europe for the moment. Would you consider moving to the U.S. for better cash flow opportunities in general? I don't know how to answer that, WCA Nation. I would say there's probably better opportunities in the U.S., but I can't really say. Way too tight, ENT. If you gross $2,500 a month, how much can you borrow for a USDA loan? I don't know. I think it depends on the value of the property. I think, 1/3 of your income is what I hear. So what would that be? That would be like $833 a month. That's what I would guess. That'd be your payment, so your total payment. Chad Michael Burke says, I just refinanced my home. How long should I wait for a HELOC? I have around $70,000 in equity I want to utilize. I would do it soon. To apply for a HELOC, I would do it right away if you can, especially with a local bank. Cracked Statue says Airbnb arbitrage, house hack, or BRRR to begin in real estate. All 3 are equally, they're all great. It just depends, which one you have more opportunities in. I love all those. Suleiman, how would I take out the cash from BLOCS? Suleiman, I don't know what that is. You stumped me. Totally stumped. Christina says Jacksonville, St. Augustine. Yeah. Dude Real Estate says, okay. Butte Ween says, what's the deal with elections and market fluctuations? Yeah, what happens, folks, is people get shy during an election year. They're scared to buy. They're scared to invest. And I would say that no matter who gets elected, things usually go back to normal. You know that song by The Who, We Won't Get Fooled Again? No matter who gets elected, things typically go back to normal. Half the people are scared to death of Trump. Half the people are scared to death of the Democrat. Well, so lots of people don't vote. But after it's over, they realize, things were pretty much normal. Then they go back to normal, usually. Dwayne Murphy says, would you suggest someone stays away from single-family rentals and tries to do multi? Yeah, Dwayne, I would do as big as you can. That's one of the theories in my book. I've got a book called The Perfect Investment, which is about investing in multifamily. By the way, if you want a copy, come visit me on BiggerPockets. I'll send you a free PDF of my book. It's a full 200-page book. but I'll send you a copy if you promise to give me an honest review on Amazon. I'm trying to get 100 reviews before Thanksgiving, and you can help me. So if you want a copy of The Perfect Investment, how to build a lot of wealth from a multifamily, you can do that by visiting me at my on BiggerPockets profile, but also wellingscapital.com/resources. Oh, thanks, Gluey 2001. That's nice. So if you want to get a free copy of the book, you can also get it on Amazon. You can just pay for it. But I'd love to get a review. I also have, and I can't get you the book, by the way, if you say so on here, you're going to have to visit me on my website or on BiggerPockets profile. So the BiggerPockets profile, ask for the book. You can also ask for a free copy of my booklets, my ebooks on self-storage investing or mobile home park investing, okay? Self-storage, mobile home park, multifamily, got it all covered. If you want to get all this free downloaded to you, just go to this website. I'm going to give it to you in just a few seconds, so get ready to write it down. I'd love to have you all visit there, okay? It's wellingscapital.com/resources. So that's Wellings, WELLINGS, capital, CAPITAL.com/resources, and you'll get all that stuff for free. I just ask that you give me a review on the book. Okay, so Kaju says, is it worth investing in a country that's not rich? I don't know how to answer that. Maybe, if they're up and coming. I don't actually invest outside of the U.S. because I don't like the additional risk brought on by the exchange of currency. For the Foremost says, can you say a little more about why a HELOC with variable rate is not as good as a fixed mortgage to facilitate more investing? No, I think given the 10-year forecast for rates right now, I think a HELOC with a variable rate is generally pretty safe. I hope that helps. I don't think it's, way better to have a fixed in that case. Raed says, in the next 0 to 40 years, do you think there will be a market crash in the next 30 to 40 years? Yes. I think there will be a downturn. This is the longest expanding economy in the history of America. We're the longest by 4.5 months now. 4.5 months as of today. So, yeah, I think it's the longest expansion in U.S. history as of 4.5 months today. It's beat the old record. I absolutely think we're going to have a downturn. Will we have a full-blown market crash? I'd say it's pretty likely. There's a lot of signs in place that we could. David James says, would you rehab a house before doing BRRR and line of credit or full check of 80% of value? What are you going to do with the house? Are you going to flip it, David, or are you going to hold on to it? Maybe you can ask the question again and just clarify that a little. Okay, Southern Surfer 22 full says, who can I get started in renting out Section 8 homes? I don't know. Nate might be able to help. Paul, when will Wellings announce their next offering? No, that's okay to digress. Gluey 2001, we are doing our last raise of the year a week from today. So basically we're announcing it now and we're raising money with accredited investors for one more week. And then we're going to close this fund forever to new investors. Technically it'll be open in December, but we're only announcing it through November 22nd. Andrew Reyes says, hey dude, okay, crack statues. How do you find reputable contractors and a realtor to help find houses to flip? Go to your local RIA, your local real estate investor association. Mark Frankson, I can't send you one unless you visit me on my BiggerPockets profile. I just can't keep track. Joseph Ramirez, if you want to get more information on the corporate landlord arbitrage, visit me in my BiggerPockets profile. Again, I'm Paul Moore with Wellings Capital. And if you reach out to me there, we can get you the links and everything. I don't have that long link in front of me. Ian Jones says, so dealing with constraints of being a full-time caregiver for hopefully the next 4 to 5 years, what can you accomplish with the only line of credit and the $150,000 condo? I would definitely do the Airbnb arbitrage. You can do that from the comfort of your own home. You don't have to go out and do a whole bunch of work. I mean, you have to get out some, but not a whole lot. If you guys want to know more about the Airbnb and corporate arbitrage, read my article, How to Make $10,000 a Month Without Quitting Your Day Job. It's on BiggerPockets. It's been republished like 3 times. Okay, so here we are, 5 minutes till the top of the hour. And we're going to do a mad dash to the finish line, folks. So if you haven't got a question answered, please copy and paste it in. I will do my best to answer it in the next 4.6 minutes. And then we're going to wrap it up. It'll be 5 o'clock. My friend is coming over. We're going to jam on the guitar. Sorry, Nate. I wish you were here. Andrew, yes, I've done corporate arbitrage myself at some apartments that we have. And I really believe in it a lot. I don't think it works in every town. Basically, what it means is you go in and rent an apartment unit. You try to get the best terms you can, like a month-to-month rent. Then you furnish it, and then you go out and get a corporate tenant, and you double the rent. Like if you're renting it for $850 a month, you might be able to rent it for $1,500 or $2,000 or even more per month to companies who are putting people in these long-term corporate housing, like long-term Homewood Suites or Extended Stay America. They'd probably rather live in an apartment fully furnished. You have to pay for the utilities, the internet, the TV, the water, the sewer, and all that stuff. Okay, Kay just says, how much do you need to start investing? Start at 5 or 10,000 generally. Drayton says, thought on investing in Connecticut. I don't really know Connecticut. Somebody with a Russian sounding name, Eastern Europe, Ukraine, says we don't have real estate tax compared to the U.S. Good for you. Does it mean that investment here can be more profitable? It could be. I don't know what the risk would be like investing in the Ukraine, but taxes are a huge cost. Sometimes the largest cost to your investment. Ian says, I'll definitely check out that article. Cool. Christopher Garcia says, just got approved for a HELOC in Miami for $70,000. It's not enough to buy something. Or should I just buy something with 20% down and use the HELOC for the down payment? Absolutely, Christopher. That's exactly what I would do. Absolutely. Suleiman says, can I do an FHA loan with no income but show that the rent will cover the mortgage? I don't know, believe it or not. You're the first person that's ever asked me that, and I think Nate, Dude Real Estate, should answer that. Okay, so Dwayne Murphy says, what is the best resource for learning about trusts and rent-to-owns that you were referencing before? So that was land trusts specifically. It's very simple. For a few bucks, you can open up a land trust and put a piece of property in that. It should help make sure you don't trigger the due on sale clause. Google rent-to-own sandwiches, lease option sandwiches. I cannot honestly promise you that you're going to get the answers that you want, but that's where I would go for that. Akhtar says, can a UK resident get leverage in the US? I think it'd be pretty tough. You might need to really be very, very creative to get a loan in the US, but you can invest in New York. I think you asked that earlier. Somebody did. Henjin Huang says, hey everyone. Hey Henjin, thanks for joining. Okay, we've got 2 minutes left. If you've got a question, now is your last chance to ask it. I am getting ready to sign off. Mark says, already took the website down. Thank you. We'll be writing reviews this evening. Cool. Thank you. Well, read the book first, but if not, if you can skim the book and make an assessment, that's great. Z Shives, how can an 18-year-old get started in commercial real estate? Yeah, I just went through 7 paths earlier. I would check out one of those paths. Maybe try to go to college, maybe get a job strategy, or if you have access to capital, try to invest passively. Ryan says, I'm only 14. I don't have that much money. Congratulations. Ryan, man, if you stay on this track, I think you'll be really successful. Kaju says, do you need to study the laws? I don't know. USA Rescue, is buying a duplex and renting out second half a good investment for a single guy? We also call that house hacking. Yes. It's one of my favorite strategies to get started in real estate. Andrew Ray, and you might not want to tell the neighbor you're the owner, by the way. Andrew Reyes says, due date, best passive and most profitable investment to date? I think you're asking somebody else. If you're asking Dude Real Estate or me, just say so. Okay, Swift Arrow says, great info. Yes, thank you. David James says, it's my current residence. Would you? Okay. But it does need rehab work with $20,000, which I'm saving. I want to keep it and rent it in the future. Or would you recommend to go ahead and do the BRRR buy line of credit? And what would you invest? $80,000. That would be the line of credit. David, I hate to do this. Could you just set up a time to talk with me? If you reach out to me on my BiggerPockets profile, I am taking calls next Wednesday to answer questions like that. David James, I just don't think I'm answering your question. You've asked a couple different times, and I think I'm just failing. I think I really need to connect with you more and ask you some more questions and go back and forth. Okay, thank you, Zach. Hey, if you like this presentation, please tell BiggerPockets you appreciate it. The best way to do that is to give us a thumbs up, a like, or to share the recording of this presentation. Thank you, USA Rescue. Thank you, Stevens Lewis. Thanks, Zach. Thanks, Andrew. Thanks, Dude Real Estate. Hey, if you want some training, check out Dude Real Estate on YouTube and on another channel, which I'm forgetting, Udemy. Is that right? Thanks for your time, Gluey. I know I'm saying that wrong. USA Rescue, thanks. Thanks, Mr. Rodriguez. Nate will answer your question. Okay, thanks, everybody. Have a great day. We appreciate you. Check out anything I'm offering at wellingscapital.com/resources. Andrew for saying that. Thanks, JK. A great Friday evening, and we'll see you next week here at BiggerPockets. Thank you so much.